Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Now we'll go through this pretty quickly because I'm assuming most of you know how to draw the candlestick line, but what we're going to do is go over how to construct it just to make sure everybody's up to a level playing field. From my experience, about 10 or 15% of attendees at these broad-based web seminars are very new to candles, but I think even with this basic introduction, you're going to see, especially if you haven't used candlesticks before, that you're trading at a tremendous disadvantage in any market, especially Forex, if you're not using candlesticks. There's no doubt in my mind that the most technically oriented market is the Forex market, okay? Because one of the great advantages of technical analysis is that it's a way to look at all the fundamental news. You know, what's the easiest way to see all the news? Easy, look at the price. So, the biggest percentage of technical analysts are in the FX and the Forex market. And also, it's a great aspect of options. The options, and I'm sure you've heard Stephen talk about this before, the limited risk. A lot of cool things you could do also with the flexibility with stops. We'll look at that a little bit later, because one of the challenges we have is that the market, and I know when I do my seminars and I don't really, and if I'm not focusing on option tactics, I'll say, well, you have a stop under the low of this particular candlestick signal, but, the market could close under it only to have it bounce back. But with options, you have a lot more flexibility because you could withhold, I don't want to say withstand a little bit more pain, but it's less risky to let the market go a little bit further under the stop because of the delta. You're not going to have a one-to-one delta. So we'll look at that a little bit later when we talk about stops and some option ideas. But again, I'm not a real expert on options. My expertise is candlesticks, but it's so easy to combine the power of candles, because the candles, and you'll see this when we look at how to use even something as basic as the construction of the candlestick line. The candles give you early potential reversal signals. But let's go through this pretty quickly. The real body is the fat part of the candlestick line. The Japanese place a lot of emphasis on the relationship between the open and close. Now, because of the Forex market is a 24-hour market, there are nuances between Forex and non-Forex candle signals, and we're going to look at that a little bit later on. But anyway, the candlestick line, two components. There's a rectangular portion called the real body, which could be black or white, and the real body is simply the relationship between the opening and the closing. If the close is higher than the open, we have an empty or white real body. And if the close is under the open, and this could be any time frame. This could be a 10-minute chart. The close of the 10-minute period is here. The open is here. This could be a daily chart. Market opens here and closes here on the daily chart. Okay. Now the lines above and below the real body are called the shadows. So the top of the upper shadow is the high of the session. The bottom of the lower shadow is the low of the session. So essentially, we use 4 data points to make the candlestick chart: open, high, low, and close. And this is a very important aspect, that because we use these data points, they're exactly the same data points we need to make a bar chart. So everything you learn at ISE, all the speakers you have, they're all the top-notch speakers, pivot points, moving averages, trend lines, fib retracements, whatever you do on a bar chart, you could do on a candlestick chart. But by using the potency of the candlestick charts, you're going to get visual clues of a shift between supply and demand that you don't get with a bar chart. So it's really the best of both worlds. You can get all your Western signals, and we'll look at examples of this a little bit later, plus immediacy, the quickness of the candle signals. Now, depending on your charting platform, sometimes it could be green instead of white, same concept. It could be, in fact, a lot of the charts I'm using today have this. And instead of black, we have a red real body, same concept. Now, the lines that are just emerging on your right are called doji. And doji are sessions where there's no real body. See, it looks like a cross. And that's when the sessions opening and closing are the same. And we're going to look at doji in a couple of minutes. But let's really start down the path of our educational journey with the candles. The Japanese will say every candle or candlestick line tells a story. And what this means is that you can use the real bodies and the shadows, remember the lines above and below the real body are called the shadows, to gauge the market's momentum. So let me show you how you can use the real bodies to avoid losing trades. Everybody's shouting, sure, yes, yes. Okay, so let's first ask, okay, why do the smartest traders use candles? Okay. And as I mentioned before, a lot of the speakers you have prior, a lot of ones you have going forward, you can bet they use candles as another tool in their trading arsenal. Reason one, I mean, there's lots of reasons, but we're just going to focus on a couple of them right now. Okay, as I alluded to a few seconds ago, you can use all your favorite bar charting tools. So I would never say use candles instead of moving averages or instead of Fibonacci retracements. I don't say that because it's not true. We're going to look at the importance. Now, there's a lot of misuses of candles. Okay, and like I said before, it's great there's a lot of information out there. Unfortunately, most of it is wrong. There's a lot of misuses, and one of them is the attempt to use candles to buy and sell in a candlestick signal. That's the best way to get burnt with candles. Okay, it's really important to get that combination of a candle signal and a Western signal. But once again, we'll look at some examples as we progress during the seminar. And, I don't have to read this because this is what I mentioned before about the same data. Now, let's look at this, the next reason, and this is really important. So have your mental focus set on 100% here. Okay, reason two. Candlesticks, as shown in the title, give you twice the information of the bar chart. Now, what this means, and this is the power and the potency of candles, they being the candles, like a bar chart will show the price, but the candlesticks also show the momentum or the force behind the current move or the lack of force. So let's look at this as applied to the charts. Okay, here we have a series of small real bodies. The Japanese call these spinning tops. Okay, now let's look at this tall white real body on the left and a long black real body over here that I'm showing with the arrow. Obviously, the bulls are in charge with the tall white. Remember, the white real body means the market opened here and closed here. So here we have a session where the market opened on the low and closed on the high. Here we have a session where the bears were in domination. The market opened here and closed all the way on the lows. Now, to the right, okay, here we have a series of small real bodies. These are telling us that the prior trend, the immediately preceding trend, is losing its breath, as the Japanese would say. They have great expressions. So the prior trend could be losing some force. So let's look at an example. And ultimately, if these real bodies get smaller and smaller and smaller, what do we wind up with? And, of course, the answer to that is...
Hey, Steve, we can't see your cursor. Oh, there's your cursor. Okay,
right.
Good.
Okay. Winds up with a doji.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.